Futures pointing to a higher open on Wall Street. Investors optimistic that comments from Fed officials suggest that the central bank is still on track to cut rates this year, which was echoed by Atlanta Fed President Raphael Bostic in an interview today. Our next guest saying that the consumer can make or break the Fed's next move. For more on this, we want to bring in Cayla Seder, State Street macro multi-asset strategist, is here. Cayla, it's great to have you here. So let's talk about what we're hearing from Fed officials this week. Certainly, it seems like investors, at least traders, still remain hopeful that we are going to get that rate cut here in September. What's been your takeaway from the commentary that we've gotten so far?
Yeah, I think it is likely we could still see a cut this year. However, I think the biggest risk for markets right now is that they're going to bring forward that cut far too soon, because what we've seen is that the consumer is still in aggregate resilient. There are signs that some consumers are feeling pain, and that's actually a good thing. That means that the transmission of policy is working. However, that transmission is really slow. And so I think that's why we've seen a lot of Fed speakers kind of echo this message of patience.
Yeah, we're going to be getting preliminary consumer sentiment reading later on this morning here. Cayla, what are you going to be watching most notably for in the moderation in this consumer mindset, especially as it dovetails through to some of the economic data that's coming next week on CPI?
Yeah, I think the data we get today is important, but the data for next week is even more important. We do still want to see consumer sentiment roll over just a little bit, I'd say. However, I think next week what we're really looking for is really a rollover in inflation and a continuation in a move lower in inflation numbers. And actually, when we look at some of the data that we can see in terms of price stats, which is online goods inflation, we're seeing that some signs of softer data coming in. And that's really important because if you think about the progress so far on inflation, it's really been concentrated in the goods space. And so what that means is to get further improvement, we can't see goods reaccelerate, and we finally need to start to see signs that the consumer is weakening in a way that it impacts the services side of inflation.
Cayla, when you take a look at the recent market action, we have certainly started to see investors maybe get a bit more defensive given some of that uncertainty that we've been talking about here over the last several weeks. What is the movement here that we've seen towards consumer staples and really towards utilities? What do you think that further tells us then about the market leadership that we'll likely see?
I think moving forward from here, we still really prioritize large cap quality growth. We're not tempted by moves to go to small caps or even some slices of, more, I'd say, value. Just because if we think about it, the progress on inflation is likely going to be very slow. And so what that means is we're going to be in an elevated for longer environment, I think, than some folks may anticipate. So we really are seeing the most opportunity in places like tech, in places like communications. And so we see leadership ultimately remaining there, even though I do know the past week or so we have seen a couple adjustments. We still prioritize the places that look best equipped due to balance sheet strength and things like that to really navigate this interest rate environment for longer.
And with that in mind, even as we're navigating the back half or the waning parts of this earnings season, there's still one key barometer that's left for the markets here, and that's something that started off all of the fanfare around generative AI, and that was NVIDIA. And so as we're kind of waiting for that, and then later on going to be getting even more retail results, how could that set up some of the growth forecasts here for the rest of this year?
Yeah, I think when it comes to tech, generally speaking, one thing that was pretty interesting is that heading into earnings season, we did see institutional investors kind of take a step back from tech just because earnings season seemed to be such a big risk. But now, so far, earnings have been okay. We're starting to see more moves back into tech. And so I think moving forward from here and into the rest of the year, we still really like this space. When it comes to retail, it is a bit nuanced, but I think we still like the spots that are able to cater more towards services. Because when we look at how consumers have adjusted their spending habits since the start of the hiking cycle, they're still spending more on services than they are goods. And so that's kind of relatively how we're thinking of navigating things.
Cayla, I've pulled out the flip-flops. I've started to not wear socks on Fridays at this juncture. I'm trying to figure out if I'm selling in May and going away and I'm getting ready for the summer travel season, where are areas that I should feel comfortable selling out of right now, and where are areas areas that perhaps I should be buying into, sectors that you're bullish on?
You know, I think I've already talked about tech. I think another place that we still really like is energy, actually, especially because if we think we're going to be in this elevated for longer environment, it's going to be because growth is stronger than expected, or at least growth is maintaining. And so I think energy is one place that could be a little underappreciated, or some people may have questions about if the Fed is going to, if they are concerned about the consumer. But because in aggregate, the consumer is still okay and we still see demand for travel and things like that, I think energy could be a pretty good place to play that.
Absolutely. Cayla, thanks so much for taking the time. Fortunately for our teammates and many of the employees here at Yahoo, it's against the employee policy to wear open-toe shoes here. So ultimately, I'm not wearing the flip-flops. I don't have the socks. Yeah. Well, I got the little footy ones. You know, you got to have those in the arsenal. Cayla Seder, who is the State Street macro multi-asset strategist, thanks so much for taking the time.
Thank you.